Apple app market is expected to hit $3 billion this year. Some investors were making big bets on the iPhone before the App Store even existed. In 2008, the iFund was launched to fund Apple's iOS developers. It's run by venture capital firm Kleiner Perkins Caufield Byers, and it's already struck big with investments in Zynga and Twitter. Earlier, I sat down with the partner who manages that fund, Matt Murphy, and asked him about his fund's strategy and foresight.
Well, we've been investors in a long time in the mobile industry. A lot of it started off at the infrastructure layer, and then we started investing in carrier services, things like that. But we knew there had to be a tipping point where any developer could reach any consumer. And we were waiting for that to happen, but there was no obvious path. And then when we heard about the iPhone, my partner John Doerr and Steve Jobs started talking, some great ideas came out of that. And that was kind of the genesis of the iFund. And Steve said, we'd love to have a great financial and company building partner along with us bringing this great new platform to market. So let's figure out how to bring the best entrepreneurs and the best companies on this platform, and it bloomed from there.
What is the relationship that you've created with Apple because of this, and how is it beneficial?
The relationship is on many levels. I mean, it's from the kind of day-to-day, a company wants help with improving their app and their UI, help with marketing, help with some strategy things. At that level with the companies, it's also comparing kind of thoughts on what are areas of interest to both of us, between us and Apple. So there are a lot of different executive contacts and a very kind of free-flowing exchange of different companies in the ecosystem. So I'd say it goes from what companies are interesting we should be investing in to how can we help some of these companies get bigger and better and turn into something really large.
Why just iOS and not Android? I mean, the Android marketplace is expected to be bigger than Apple's App Store by July.
Sell more devices, but not bigger. If you look at the stats from last year, iOS was a little over $1 billion in revenue, and the Android marketplace was about $100 million in revenue. So right now it's about 10 to 1 from a revenue standpoint, and individual developers are still monetizing about 5x better on iOS. But it's not a zero-sum game. Android's going to be an important platform for a long period of time, and I think it's great that there are multiple platforms out there, and historically there have been too many. Now kind of consolidating down to 2 platforms that really matter. I think developers have to make the choice around their app where they want to devote resources and where they can make the most money, and iOS is the king of that right now. It's also, it's a terrific, everything they've done from the developer environment to the device to the App Store, the experience itself on the iPhone is just so well done that it's hard to replicate. So that was the start of this whole tipping point, as I mentioned before, the domino that got this whole ecosystem going. So when we started, there wasn't even any Android. It was inconsequential, and iOS has continued to lead the wave. But I'm not dismissing Android. It will be also a very important platform.
You've looked at 6,000 companies for the iFund, but you've only invested in 14. How do you choose?
Well, it's actually more than that now. We actually a number of them haven't been announced, but we're actually over 20 now. In fact, next month we're having an iFund Summit, which we do about every 6 months, and it'll be the first time where we had over 20 companies in the portfolio there. But to answer your question, I mean, a lot of it comes down to feeling like who's got a big new idea, and it's a great entrepreneur. There are so many terrific applications on iOS, and many of them are great. Mom and pop, single person, the story about the kid creating the bubble app, those things proliferate, and they're there all day long. And those are great for consumers, great that a developer can get something like that out. What we're really looking for at the end of the day is what are going to be the next Amazon, eBay, Google in this new mobile ecosystem. So we've got pretty big ambitions for these companies, and so that's really the main filter. But sometimes you just don't know. Sometimes you just don't know when you start these things how big they're going to be. So oftentimes it comes down to just picking a really great entrepreneur who has big ambitions, and you can help steer the person to great things. So
you are looking for the Grand Slams.
Absolutely.
Like Zynga, I would guess, is one of those.
Zynga's one of those, and Zynga started out almost entirely on Facebook, and now they're a massive developer on the iOS platform. So it shows how more and more important mobile is becoming. If you're an internet company, you can't possibly ignore mobile. eBay's been very public about their stats, growing their revenue from $2 to $4 billion this year on mobile. The amount of dollars shifting to mobile is massive, and the amount of time we're spending. I mean, look around. How much time are people now spending on the mobile versus the PC, surfing the internet, looking at apps? I bet it's 50-50. And a year ago, it was, many people weren't doing it at all. And for those that were, it was still maybe 80-90% internet. So we've had a massive shift in eyeballs.
You've sold companies to Google, RIM, Groupon. How do you advise startups in this environment about staying private, going public, or selling?
Right. I think a lot of it comes down to how well the company's doing. Some of those that you mentioned, may have been more the product was doing well, a great team, but you felt like if you took that and put it inside a Groupon or put it inside a Google, that they could grow 5 to 10x faster. And so some of it comes down to that. How much can the company on its own get that escape velocity to go public, and then how much are the entrepreneurs driven to really go it alone?
You were John Doerr's understudy. What lessons did you learn from him?
John's just fabulous in terms of his vision and his drive and the way he can help companies be successful. On so many dimensions, I've learned things that may be hard to replicate. John Doerr is one of the world's best recruiters. John Doerr is one of the best in the world at business development and helping a company land that really big deal. And he just has a unique capability to recognize big trends and see an idea and realize how it can be much more scalable.
You got into Facebook and Twitter on the secondary markets. You've been criticized.
Twitter, we led the round.
But it was a later stage round.
That's right.
I mean, do you feel like you missed those early on, or you can't win them all?
Well, of course we missed them. Otherwise, we would have been in the A round. We got in Zynga, which is great. And in Twitter, I'm just proud that we as a firm recognized that it's okay to miss things. You're not going to get everything. The question is, do you get it at a time where you still think there's huge upside? And despite the valuation on Twitter, it's a phenomenon like we haven't seen in a long time. So I'm happy that we're investors, and I think there's a lot of upside. And I think it's easy to just sit back and say, oh well, we missed it, so too bad. But when it's like anything, if you miss something, if you miss a shot in basketball, what do? Shooters keep shooting. We're shooters.
That was Matt Murphy, a partner at Kleiner Perkins who oversees the iFund.